Well, the Australian dollar fell sharply overnight.
The local share market is going to slip.
Trade wars.
It was expected to lose 1%.
President Donald Trump has announced significant tariffs on imports from Canada, Mexico, and China. This has sent the global markets into a frenzy, spiking the value of the US dollar and causing stocks to fall today. In this video, I'll give you the full rundown of what it could mean for your investments. So, what has Trump actually done? Simply put, he has placed a tariff or a tax on imports coming into the United States from 3 countries. Supposedly, this was introduced to address issues like illegal immigration and the influx of drugs such as fentanyl into the country. By placing tariffs on billions of dollars of imports, these countries will suffer economically. So Trump is forcing them to help the US address these issues, or so that's how it's being positioned. Canada and Mexico are facing a 25% tariff on their goods imported into the United States. Canada has a reduced 10% tariff specifically on energy products like oil, gas, and electricity. China will have a blanket 10% tariff on all imported goods. The tariff forces the price of imported goods up, making them less price competitive in the United States. The pain comes from the reduced American consumption of goods from these countries, as they may seek cheaper alternatives such as those locally produced in the US. Less demand for imports from these countries means less income for these countries. That could mean lower incomes, lower employment, that kind of thing. So tariffs are increasingly rare these days as countries have generally tried to come together and mutually gain from comparative advantages. The 1994 NAFTA and the 2020 new NAFTA were created to encourage more trade between Canada, Mexico, and the US to benefit from these advantages. Mexico, for example, is great at mass-producing cars, while the US is great at designing them. So it has been mutually beneficial and often cheaper for the consumer, at least until now. For American consumers, tariffs are likely to lead to higher prices. Up until now, the Fed has penciled in 2 rate cuts later this year. Now, those don't look so certain. So American households and businesses will be stuck with higher borrowing costs. Further, even though America is a vast country, it still imports hundreds of goods critical to daily life. Over 41% of imports are from these 3 affected countries. As a number, $1 trillion, that's how many goods will have tariffs imposed. That affects 68% of petroleum imports, 65% of computers, 56% of phones, and the list goes on and on. Tariffs are almost always passed through, so these countries won't be paying it. Businesses are unlikely to pay it, so they'll pass the costs through to the end consumer in price increases. In economicsy terms, this is called cost-push inflation, hence why rate cuts are now uncertain. So let's now talk about us, you and me, sitting down at the bottom of the world, seemingly unaffected by what America's doing. Well, unfortunately, it affects us as well. So let's dig into that. First and foremost, the stock market. Today we have seen the New Zealand stock market down 1.4%, the Australian down 1.8%, the Japanese down 2.8%, and Hong Kong's Hang Seng down over 1%. So you may have seen your stock portfolio fall today. There is a few reasons why this affects your stocks all the way down here. First, investors hate uncertainty. When the market closed on Friday, nobody was expecting this to happen so quickly and such massive tariffs. So many investors have sold up their riskier investments to sit tight and wait for less volatility before re-entering. Second, China is Australia and New Zealand's largest trading partner. Any slowdown happening over there is catastrophic for local exporters. In the agricultural space, you've got A2 Milk, Elders, and GrainCorp. And in the mining space, the likes of BHP, Rio Tinto, and Fortescue. Companies like Fisher & Paykel Healthcare are affected as well by the Mexico tariffs, as 60% of their products sold in the US are supplied by their Mexican plant. As New Zealand's largest company, this 6.5% drop is certainly large. But these tariffs are likely to hit American companies as well. If consumers are facing higher interest rates for longer and cost-push inflation, they'll see their disposable incomes negatively impacted. This means they won't have as much money left over to spend, which is catastrophic for anyone trading in the world's largest consumer market. It's also the opposite of what many people expected a Trump administration to bring in. In many of his speeches, he talked about the cost of living and the prices that people were facing. This is kind of contrarian to that.
To defeat what was record inflation and rapidly bring down costs and prices.
Now, many companies rely on imported goods to operate in the US as well. Boeing, for example, outsources their production all over the world, and almost every business will be impacted by tariffs on fuel, for example. While most businesses will try and push these costs onto consumers, many won't be able to due to competitive pressures in their industry. So we may see a major fall in large-cap American stocks this week. It'll certainly be one to watch, with the S&P 500 futures already down 2%. So stocks have had a hell of a rough ride today. Crypto, though, fell off a cliff. As a riskier asset class, investors made some monster sales. Bitcoin dropped 4% today, Ethereum 12%, Ripple down 13%, and as you scroll through the list of smaller cryptocurrencies, these tariffs have certainly frightened investors. Third up, as I covered in a similar video a couple weeks back, the Australian dollar, and more so the Kiwi, are risk-on currencies. When investor sentiment is high, they look towards risk-on currencies that provide a higher return. When there is market uncertainty, they flee, and that's what we're seeing now. The Australian dollar and New Zealand dollar have fallen in value today against the US dollar. This is often good for exporters, but bad for importers, as it requires more local currency to purchase foreign ones. Unfortunately, our exporters are almost always reliant on China, so the outlook is poor when their market is facing a 10% tariff from their largest trading partner. Looking at importers, a weak currency will increase their cost to import goods from abroad. These businesses will do everything they can to push these higher prices of doing business onto the consumer, you and me, and it'll be wide-ranging from fuel to cars and electronics. So as an investor, what should you do? I can't tell you definitively, but it is important to not freak out. These things happen from time to time, and as we know with the pandemic, which was a vastly bigger issue than this, the market will recover over time. To sell now is to lock in losses. So if you fear worse is to come, you could sell. But if you're in it for the long run, you might want to consider holding on. Markets move pretty quickly with the news, so with the US futures already down and the rest of the world has already started their Monday trading sessions, the fears of tariffs have probably already settled into prices. So stay calm and potentially you might find some bargains to buy the dip. For me, I'll be keeping my auto invests active. I'll be dollar cost averaging my way into the market just the same way as I have done for several years now. Something that has been a quiet performer over the past year is often a place investors flock to during times of uncertainty, and that's gold. Over the past year, it's up over 38%. During times of uncertainty, investors have left stocks, left risk-on currencies, and they've certainly left crypto assets. Gold has seen a small drop today, but overall, it has done well against the backdrop of uncertainty. As always, diversifying your portfolio is critical to weathering any storm. Don't put all your eggs in one basket. Find different stocks, industries, products like bonds and currency, or even geographies so you've not over-indexed on any one investment. For example, if the Australian dollar keeps falling, having your money invested overseas in a foreign currency could be advantageous. ETFs can be an excellent way to get instant diversification, and I've prepared some videos recently looking at every single Vanguard, BetterShares, and SmartShares option on Australia and New Zealand, so make sure to give those a watch. So let's sit tight and see where the US goes from here. Will they keep the tariffs around for the long run or drop them after a few days? Let me know your thoughts down below in the comments. Also make sure to check out some of my other Australian investing videos somewhere over here. Thanks for watching and I look forward to catching you on the next one. Cheers.